And welcome back, everybody, to Simplexity Analytics Seasonal Report. This is for February of 2025. And February is usually a month that doesn't have a heck of a lot going on in terms of having extreme markets either way, both bullish and bearish. And this month, we only have copper that is the most bullish and natural gas that is the most bearish for this month. But if you've been following along with this channel for any time, you know that the energy markets do not correlate well on heat maps. They're too volatile and they hit stops too easily for the back test, and we don't do heat maps for the energy markets. So we're only going to have a heat map for copper, and as always, we do the S&P E-minis every month, and we're going to take a look at the 30-year bonds as well because they're kind of interesting for February too. And first off, we're going to have a look at the high-grade copper market, and we see how February is the most bullish month of the year for copper. It finishes the month higher than it opens 68% of the time and has made just over $46,000 in 20 years of this back test. So it's a pretty significant month for copper. And if we look at the seasonal indicator, we see how that shows out in this steep rally that occurs right after this low here. This is the end of January, and into February we get a big rally according to the seasonal indicator. And if we look at the price chart itself, we see that 2 out of the last 3 years have seen this play out. The one that didn't was in 2023. We didn't get any rally at all. February actually saw the beginning of a pretty big decline that lasted throughout most of the spring and summer and into October. But last year, we saw a massive rally that went into about May or June, and then a couple years ago, this is 2022, we saw a rally which was pretty much just February, maybe a little bit into March. So let's see how this looks on a heat map for February. On the heat map, we see that we only have a couple of little red days spattered in amongst the last couple weeks of this month, but for the most part, this is all green, and the big green areas occur in the second week of February, and then we have some bright greens in the last 2 weeks as well. So the big area here to concentrate on would be the second week, because we have this block here of bright greens on the trading day left of the month, which is one is over 80%, but they're all over $10,000 in the back test. And that's what we really want. We want the combination of a high winning percentage and a high dollar value. And when we look at the metal markets, this is gold, silver, copper, and platinum. On the heat maps and on the back test, it's difficult for these markets to get much above 80%. So 80% or above is extremely high for these markets. And we have a few in the 80s here with the high-grade copper market. This is a very good one here, 86% and $17,000 on the specific date. This is February 19th. And we have some good holiday trades as well. So this would be President's Day holiday. This would be days before and days after the holiday. We have a bunch of mid to high 70%. After is actually better than before for the holiday trade. So there's a number of good areas here to look for copper. Lots of green and not much red, and that's what we want. Next, we're going to have a look at the 30-year bond chart. And I'm doing this because there's not really much going on in terms of extreme levels, but the heat map is kind of interesting for the U.S. bonds. So let's first have a look at the chart here. February is only the 8th most bullish, so it's actually a more bearish month for the bond market. Only 52% of the time it's finished higher, so it's pretty much an even split 50-50, and it has lost a little bit more money on the long side. And if we look at the seasonal chart indicator at the bottom, we see that February, when it starts off, has shown a pretty significant decline. And then we have a modest rally back to where it was at the beginning of February. And we see this year after year. And if you look at the price chart itself, we see how February comes in a couple years ago, declines, and then rallies. Comes in 2023, declines and rallies. In 2024, decline and a really small rally before it declines some more. So let's have a look at what this will look like on a seasonal heat map. Now, based on the chart we just looked at, you would expect that this would be what the heat map would look like. We see the initial decline as February comes in with lots of reds here, and then we see the rally later on with nothing but greens after the holiday in the middle of the month. So if we're looking for shorts, we're going to look for them right away at the beginning of February, where we have a lot of bright reds up here. We have percentages that are somewhere in the 90s and a lot are in the high 80s, and we have dollar values over $10,000 as well clustered in this group here. And then in the second week, we have a smattering of those as well, but not so much concentrated as we do in the first week. Then once we get past the weekend and then the holiday, we have a short week here in the third week of February, we're green. And we have a lot of bright greens here in that week, especially if we point out these holiday trades. So this is days after President's Day. Historically, we have 89, 90, 83, and 86%. We have 2 of those 4 days above $10,000. And this day right here, February 21st, 4 days after the holiday, each of these days is at least 86%, and they're all $10,000 or more. So that's a very bullish area right there. And this comes a little bit after we have a 5-day hold, which is at 78% and $17,000 for entering a bullish trade on the first day after this weekend, and then that is a 5-day hold, so that will be holding until early the next week. So this is a very bullish area here for bonds. And as we do every month, we're going to take a look at the S&P E-mini market. This is going to be for February 2025. And we see how Februaries are pretty much an even month for the stock market. This is the 8th most bullish month, so that actually makes it bearish. But because of the upward drift in the stock market, they tend to rise over time. It still does produce positive results, as it has a 57% winning percentage and has made $3,400. But $3,400 over 20 years is basically a flat trade. And 57%, that's almost 50-50. So this is pretty much an even month for the stock market. And if we look at the seasonal indicator at the bottom, we see how its tendency has been to start off slow and then rally later on. Start off slow, rally later on. That's pretty much what we have every year here. And on the price chart itself, a few years ago, we saw initial rally, then a decline. In 2023, we saw a decline right away. Then we saw a decent rally heading into the summer months. And then last year, we saw it rally immediately in February. So we've had pretty much one of each here for the stock market in the last 3 years. So it's anyone's guess here what's happening in terms of seasonality for the stock market. But let's have a look at the heat map and see what it tells us. And the heat map for the S&P E-minis for February shows pretty much the opposite of what the heat map for the bonds just showed, which makes a lot of sense because these markets often do move opposite to each other. So we see how the first couple of weeks for the E-minis are bullish with lots of green here, especially in the second week. And then that comes or leads us into the second half of the month, which is bearish. And most of that bearishness with this bright red occurs in the third week or the first week after this holiday. So if I'm looking long, I'm going to concentrate on the second week here where we have a bunch of high 80s and 90% trades. And we also have a 5-day hold over here, which is not great, but it is a decent one. And then we head into the second half of the month. And right after the holiday, everything turns bearish. We have a couple 100% days here. We have 12-0, 14-0, and then we have only one loss here in 13 years, 92% for February 20th. So big area of bearishness here. We have strong dollar values. This one's over $20,000. This one's over $20,000 with one loss. So this is trading day of the year, number 33, and it has had one loss in 23 years. And then we also have holiday trades. We have the days after holiday are not bright reds, but there is a concentration of 3 out of the 4 days here are bearish. So if I'm looking bullish, I'm going to look in the second week, probably on about the Tuesday. I'd really like to see Monday be a down day, and then we could have a turnaround Tuesday trade to kick off a big rally here for the rest of the week in the E-minis here. And then after that, I'm going to probably take profits if I'm long at the end of this week, because I'm going to end up looking to get short at the beginning of the next week and then capture what might just be a simple reaction to a rally that occurred here. The market kind of reverts to the mean and is profitable on the short side in the next week. So that's going to be the plan for this month for the S&P E-minis. Thanks for watching. Remember to like and subscribe and hit that notification bell so you're notified on our next videos. Simplexity Analytics, making complex trading simple.